Good morning, everybody. This is the live market open for Monday. Happy Monday. It's April 18th. I'm Yohay, Elam, a Forex Quench Market Movers podcast, doing the show as usual for FX Street. As usual, we'll cover recent developments, and we did certainly have a few developments over the weekend, talk about various charts and levels, discuss the next 24 hours, and of course, answer your questions. If you cannot see the chat box alongside the screen, please go to the address right here, tlk.io/fxstreet-forex-live-video. Okay, the big story of the weekend, is something that's been building up for a long time, and the oil summit in Doha. So it totally failed, okay? No partial agreement, no fudge, just a total failure. Just no agreement, no accord, no statement, no declaration. Okay, the blame, it seems, according to what we know now, falls on the Saudis. Saudi Arabia wanted Iran to be in. Iran already told members that it will not be sending its oil minister. And a few other Gulf countries, according to what we've heard this morning, also sided with the Saudis and decided that if Iran is not in the decision to freeze oil output, then there's no deal. This is different from what we heard beforehand, that Russia and Saudi Arabia would go alone. Okay, so of course we're seeing a big fall in oil. Something that sort of slows it down is that there is a strike in Kuwait, so the production there is about to fall. So, and nevertheless, that's the big story. Let's take a look at oil prices before anything else. So, okay, we did enter the weekend with some expectations that there would be a weak agreement. So we did have oil prices sort of finding support here at 40 before the weekend began, and we closed at 40 more or less, 40.38. And then this is the weekend gap. The high so far has been 39, but we already fell to support here at 37.62, which was also support at the end of March. Okay, so at least the technical lines work very well on WTI crude oil. Since then, we've bounced around, but all in all, it's a fall of over 5%. Currently at 38.15, a big fall in oil prices. When we're talking about oil, we're talking about the Canadian dollar. Also here, there's a big gap. Of course, to the upside, we closed the weekend just under 128. We've seen some strength in the Canadian dollar, and of course now we're seeing big weakness, a jump of over 1%, 1.36% in dollar CAD. We're a bit shy of the 130 level, okay, but now perhaps we're moving a bit to the upside. Let's see if dollar CAD challenges 130, currently at 129.88. The old line here of 129.30 supports the pair. Okay, so also here technical lines do work. Look how we had this 129.30 level right here at the end, in the middle of March, and now this is the low level after markets opened. 130 is of course next level of resistance, followed by 130.80. If we have a turnaround in oil prices, support is at 128.30. Okay, another big gap is seen on the Aussie dollar. Okay, we did see a correlation between oil and the Australian dollar. The fall here is not as strong as in the Canadian dollar, of course. Also here we found some kind of support at 76.40, which worked as resistance right here and also worked as support in the past. Not such a strong line, but still managed to hold the pair up. Of course, higher resistance is 77.40. All in all, the Australian dollar is falling to the low end of the range, not really collapsing. It's just a secondary effect. Okay, further support is at 76, followed by 75.30. Okay, New Zealand dollar had a relatively better fate. Also here we opened with a weakened gap to the downside, but this gap was closed quite fast because we had inflation figures in New Zealand coming out better than expected, a rise of 0.2 quarter over quarter instead of 0.1. Remember that in New Zealand, inflation figures are published only once a quarter, so they have a bigger impact. Of course, with higher inflation, there's a lower chance that the Reserve Bank of New Zealand will announce any new monetary stimulus. Okay, so we are seeing a weaker kiwi, but not the reaction isn't as strong. Okay, let's now move to the Japanese yen. It's a safe haven currency, of course, the safe haven currency. More specifically, we had tragic news before the weekend from Japan. Reports we had an initial earthquake on Thursday, then a few aftershocks, and one of these aftershocks was actually worse than the first earthquake. In the south of Japan on Friday, it was more devastating one, 7.6 in Richter scale, the magnitude of that earthquake. And what happens when we have trouble all over the world, including in Japan? Money flows to Japan even when the trouble is at home. It's not the same magnitude, of course, as the terrible catastrophe of 2011, but nevertheless, with oil prices falling, safe haven flows, and this earthquake, it exacerbates the situation. So we had already dollar yen fall to the lows. Well, it got close to support at 107.65. Then bounced a bit back up. But anyway, we do have a weekend gap here that remains open, wide open. Remember, when a weekend gap doesn't close in the first 3-4 hours, usually it's very telling. Usually tells us that the weekend gap is here to stay. Okay, so currently we're hugging the 108 level. A significant fall in dollar yen. When we have, of course, a big drop in the Canadian dollar, a big jump in the Japanese yen, we should look at CAD yen. I think Luca mentioned it before the weekend. Anyway, or someone else, correct me if I'm wrong. Anyway, this was one big short, the big short if you've seen the movie. Anyway, 83.20 is the current level. You can see here a huge weekend gap. The next level of support is the round number of 82. Before the weekend, we did have a slide. I think when Luca was talking about this going short, it was the morning of Friday morning when we had the show. So at that point, the pair was only beginning its slide. Was only around, was still above 85. So that's quite a big short. Currently, some resistance here at 83.50. Okay. Next resistance at 84.30. Next support at 82. Quite a big move on the Canadian dollar versus the Japanese yen. A huge weekend gap, a fall of nearly 2% at the moment. Okay, let's go back to the top. Euro dollar, unfortunately, it's a bit boring this morning. You can call it safe haven flows, but I would call it only range trading. We did have some kind of recovery on Friday. We did open with the weekend gap higher, so you may say, okay, maybe the euro is working like a safe haven once again. I would not jump into that kind of conclusion because this weekend gap was closed very quickly. So we had the pair rising on Friday, then falling a bit to close a bit lower, to close under 113, and then it opened a bit higher. Anyway, it's flirting around these levels. 112.50 to 113.35 is the current range. The range for today, in any case, is only 30, well, almost 40 pips if I want to be generous. So it's not, this pair is not, at least now, not something to look at. Pound dollar, here we're seeing, well, we've seen the British pound trade with commodity currencies over and over again. So we're sliding to the downside. Support here at 141.25, still working. Well, weak support, much stronger support at 140.50, followed by 140. Resistance at 141.75, a bit weaker. We had some kind of roller coaster moves. Anyway, yeah, high resistance at 140.280. This is becoming a bit messy with the British pound. We talked about the yen, we talked about the Canadian dollar, the Australian, the kiwi. Let's look at dollar Swiss. No big movements here because I haven't seen big movements in Euro Swiss, but at least we have this line of 96.40 for working very nicely as support. Look how it worked as support right here in the middle of March. Then before we had a move to the upside and then a collapse. So 96.40 works as support, resistance at 96.80. Well, at least for now, that's the high point of today. and also for Friday. Euro Swiss, well, moved a bit higher, but so it now trades just above the 109 level. Beforehand, it traded just under it. Remember, the Swiss National Bank, the central bank in Switzerland, is active in markets. Euro Pound, just under 80. So we are seeing a move to the upside. A weaker pound this morning in comparison to a stable euro. Later today, we have a speech by George Osborne, Chancellor of the Exchequer, making the case against the Brexit. Okay, well, mostly sort of explaining why a Brexit is dangerous for the UK economy. The polls are still showing undecided population. Conventional wisdom, which I side with at this moment, is that the Brits will stick with the devil they know, with the European Union, despite all the problems, and not opt for the unknown, but you never know the outcome. Euro yen, here we're seeing the much stronger Japanese yen against the euro. A big fall. The low so far has been 121.70. We dropped under 122.50, which was support. Okay, so if it didn't work by a normal slide, it worked with the weekend gap. Let's zoom out just a bit on euro yen to see that we haven't been in these levels in quite some time. So we're at the lowest levels since 2013. Okay, since March 2013. I would say the next line of support is only too many lines here. So that's only 118. We could still find some kind of support at 120 because it's a round level, but we're seeing a big fall. We're seeing the Japanese yen just march forward, defying the Bank of Japan, enjoying the safe haven flows. And this is also a result of the tragic earthquakes in the south of Japan. Okay. Pound yen, of course, a similar pattern. A fall also here under support. Okay. The pair did manage to hold above the support line at 154, but then we had, of course, the weekend, the fall in oil prices, and a gap sent the pair lower. 151.80 still works as support, and we're still above this level. All right, let's take another look at oil prices. Well, rising just a bit, only 5% against 5.5% drop. Earlier, this is WTI crude oil. Also, Brent oil is following suit. Okay, let's talk about other events we had today. Of course, your questions, over the weekend on Friday. And of course, your questions are welcome. All right, so we talked, of course, the big stories. The oil summit totally failed. On the other hand, partially countering it, there's a strike in Kuwait that means a bit less production in one of the biggest oil producers. Earthquakes in Japan and also in Ecuador. In Ecuador, it has been even more devastating over the weekend. So tragic news from both sides of the Pacific. If we're already in South America, Brazil is getting closer to an impeachment of President Dilma Rousseff. Okay, so the lower house decided to proceed with impeachment. Now it goes to the Senate. It looks like she'll be ousted. The irony there is that she's ousted for corruption in theory, although she has not been implicated directly in any scandal, while 60% of parliament has been implicated in various scandals. They're under investigations. But I would say that Rousseff, the president that was elected in 2010 and then re-elected in 2014, is just paying the price for the fall in commodity prices, and mismanagement of the economy, of course, because we know that Brazil exports lots of commodities, and corruption and other mismanagement issues. I think even if she personally isn't directly implicated, it's a vote of sort of the people are frustrated, and so are other politicians on the situation there. I'm mentioning Brazil. It's the 7th largest economy, if I'm not mistaken, or the 8th in the world, and it just shows that the issues in commodity prices are moving forward, and we're not expecting any recovery anytime soon. The deflationary pressures could certainly continue. We had Villeroy the member of the ECB from France, he wants Germany to do more. So the ECB is upping the ante. The rhetoric for governments to do more, they're sort of pointing the finger more closely on Germany. Okay, that's another small development over the weekend. Before the weekend, we did have a few economic figures. I wouldn't say they did too much to move markets, but certainly worth mentioning. Eurozone trade balance missed just a bit with a surplus still of 20 billion. So German exports to China still support a high surplus. In the United States, the Empire State Index beat with 9.6 points. For April, that's, of course, a forward-looking figure. So it was upbeat, but the hard data, not the survey, the real figures, showed industrial output actually falling in the United States worse than expected in March. So the hard data for the past looks worse than the forward-looking figures for the future. So you can be optimistic or perhaps realistic and pessimistic, depending on the point of view. Anyway, it was a miss. Consumer confidence also missed by slipping under 90 points, 92 as expected. And as I mentioned before, inflation in New Zealand beat with 0.2 quarter over quarter. Comment here by Ed. Good morning. Good morning, Jake. Whereas show me a parliament which is not corrupt. Show me a parliament which is not corrupt. Well, there are various degrees. I would say that where I live here in Spain, the level of corruption is not really low, to say the least. And Brazil, it's even worse. But in some countries, the situation is better. Sometimes it's just legal corruption. I mean, money influencing politicians in a transparent way, it's out there. But in Brazil and also in Spain, there were worst case of illegal corruption, not just political influence. Okay, let's continue today. We have a relatively light calendar. We have Bill Dudley of the Fed speaking. Dudley is a dove. Okay, it makes things convenient when it's both start with the D. Anyway, he's sided with Yellen a few times. Back in August, he hinted that the Fed would not raise rates in September. So when other members, and recently when other members of the Federal Reserve went more to the hawkish side, more to the optimistic side of the economy, he remained cautious. So we're expecting from him a more cautious stance. Malaysia as well. Okay, I'm not aware of what's going on in Malaysia. I do know that the country has developed quite rapidly in recent years, recent decades. So a friend of mine has been there recently and showed me pictures. It looks super, super modern. Anyway, back to Dudley. We're expecting some dovish words. Let's look at the rate hike expectations in the United States, see if they've changed. Of course, we have a rate decision in the United States next week on April 27th. So, yeah, of course, the chances for rate hike stand at 2%. There's no press conference, no new forecasts, nothing is expected there. For June, there were already higher chances for June, but as time passes by, the chances are falling. All this according to bond markets. If we fast forward, markets expect a rate hike only in December, and it's only around 50-50. Okay, another comment here by Ed. Panama Papers is a U.S. covert release to destabilize Europe and get flows into the U.S. dollar as well as other stuff we could imagine. Funny, no major U.S. names have been released. Yeah, I'm also wondering why there were no U.S. names. Well, there were names all over the world, including football star Leo Messi, which plays here in Barcelona. But I would say that, well, at least the editor of Süddeutsche Zeitung, the German newspaper that got its hands on those Panama Papers, remember it began in Germany, not in the US, he said more names are going to come. So I think the story is far from being over. Okay. Back to FX gaps. Markets expect some unexpected reversals to cover gaps. I'm not so sure. Let's look at the charts. Here's the gap in oil price. Let's look at the gap in any favorite pair. The most major pair, of course, is the yen. We could see here a closure of the gap. Why can we expect? Why I think it's more likely that we'll have a close of the gap in the yen rather than in the Canadian or Australian dollars. In the yen, because with these tragic earthquakes in the south of Japan, the Bank of Japan, the Ministry of Finance in Japan, in Tokyo, have more justification for action. This means more fiscal stimulus to help the recovery of those affected regions in the south of Japan. And they have also some justification for intervention to weaken the Japanese yen. We've seen a concerted effort in 2011. Bernanke and other central bankers were all making an effort together to weaken the Japanese yen to support the Japanese economy in times of trouble. We are not talking about a disaster of that magnitude, but at least Japan has a more legitimate case to act on its own to weaken the currency. Okay, so I do expect some. There's a higher chance of an intervention at the moment, so I wouldn't rule out a closure of that kind of gap. But let's look at the gap. Also, the gap here is not quite big. Okay, we had a fall of around 70 pips at the moment, and the gap is just around under 108.50. So this is a gap that can be closed. But for oil prices, for the Canadian dollar, it'll be much harder to close the gap because expectations weren't so high from the Doha summit. Okay, we expected some vague statement or some agreement, even if it would be a more significant one. We didn't expect anyone to fulfill it, to implement it, but the talks absolutely broke up. The Russians are angry with the Saudis. Iran is angry. I mean, everybody's angry with everybody. This is a total collapse, much worse than expected. Okay. Funny disaster makes the Japanese yen stronger. Word, you would think it would make it weaker. Yeah, we've seen that in the past so many times, but I'll repeat the logic about why we're seeing this phenomenon. Okay, the Japanese yen is a safe haven. Well, the better term is not safe haven; it's a funding currency. Okay. Well before the financial crisis, Japan had very low interest rates. That means money was borrowed cheaply for a cheap price in Japanese yens and went elsewhere. In Forex, that meant in the good times it went to Australia and New Zealand, where interest rates were much higher. Okay, we had an interest rate of 8.75% at the peak in New Zealand, when it was only 0.5% in Japan. That was the famous carry trade. Okay, and it went also to stocks and other investments overseas. But when things deteriorated, we had money being repatriated. Okay, so in times of trouble, money goes out from the riskier assets to the safer assets. In this case, also in case of trouble in Japan, the money is repatriated for the disaster recovery efforts. And even if this doesn't really happen on the ground, the speculation about it, the expectations about this certainly have an impact. Okay, so that's it doesn't make sense that when the Japanese economy is hit, because this natural disaster hurts the economy, then we would have the currency strengthen, but that's what happens all the time. Okay, more yen for building projects. Exactly. Good morning, Luca. I think it was you, Luca, that talked about the CAD yen short, if I'm not mistaken. Anyway, it's quite a big move over there, around 2%. Okay. Yeah. Let's talk about other events we have today. We talked about about Dudley's speech. A sort of third-tier economic indicator. Yeah, you did. So you made a lot of money on that, didn't you? It fell quite a lot. And we have the NAHB housing market index. Yeah, it was a great call there. The Canadian Japanese yen short. Are you still in, or have you cashed in? Just curious. No need to answer if you don't want to, of course. just of curiosity. Anyway, yeah, the Canadian dollar is related to oil, and the Japanese yen is, of course, a safe haven. So that made a big move. For those of you joining right now, let's show you again just the CAD yen. 1.6% at the moment. Anyway, it's quite a big gap over there. So from the close on Friday, it's quite a huge move. I think it's the biggest move on the charts at the moment. Okay. Anyway, other events we have for today. Again, a light day in covered half on Friday, plus 95 pips still on the other half. Okay, nice. So you took profit. Yeah, CAD yen was already falling on Friday, and in expectations for disappointment, but the disappointment was much worse than expected. I mean, for oil bulls, of course. Anyway, last but not least, we have the RBA meeting minutes for those of you trading at night, the Australian dollar at 1:30 GMT. Okay, any more questions? We can talk about other events that we have this week. But in any case, the fallout from oil prices will continue accompanying us for quite some time. Okay, just a second. Okay, let's talk about your questions are of course welcome. Let's talk about other events we have this week. So today we have the OPEC non-OPEC meeting fallout. Okay, it's easy to see it on many charts. On Tuesday we have tomorrow we have the German zoo survey. Let's see how things are going on in Germany. We have housing data in the United States, building permits and housing starts. They need to go in the same direction, and in the past few months they've gone in opposite directions. Okay, so it's been quite interesting. On Wednesday, for those who are trading the pound, we have the UK jobs report. Wages remain more important in the US and also in the UK. On Thursday, it's a big day. We have the ECB rate decision, the Draghi show. I believe he'll try to talk down the euro, but of course, no change is expected. They delivered a huge package, but they said that it's not going to be that meaningful. Sorry, that it was meaningful. 20 billion more in QE. They cut both the lending rate and the deposit rate, but they did say that for now they're done. Since then, they reopened the door. Let's see where they stand on more action or not. Anyway, and on Friday we have Eurozone PMIs and Canadian figures. The Canadian dollar will have to wait until Friday for the fallout from this Doha meeting to occur in order to fade out, so it'll react also to local figures. Currently, the Canadian dollar is rising and falling, mostly falling on oil prices. Question here by Andy, short or long euro dollar? Euro dollar has been a very frustrating pair with some periods of movements. Good morning, Sinatra. Anyway, 113 is the current level, the range 112.50 to 113.35. We did fall to a low range. Here in this point in the chart, if you can see it, on March 10th, we had the big fall that lasted 1 hour on Draghi's move, and then a big move to the upside. Then the Fed went dovish, so we're a bit off the highs. My tendency is still a bit bearish on euro dollar, but the pair is very choppy. Okay. Okay, comment here by Luca. Watching cable this week, more scaremongering on Brexit. If we start seeing some less gloomy polls, then shoulders may break to the upside. Okay, let's look at that. Polls have been quite mixed. Small tendency towards the Remain camp, maybe, but so many people on the fence, undecided. Expectations are yes, they'll break towards the devil that they know, stink in the EU, but it's far from certain. Anyway, head and shoulders on pound dollar. Yeah, maybe this is one shoulder. This is the head. Um, anyway, yeah, we could see it. I'm bearish on the pound in general against all currencies because of uncertainty. Now, remember that this uncertainty already has an impact, okay? Even if things happen as expected and the UK stays in the EU, at the moment, the scaremongering does have an effect, okay? The fear that Britain will stay out. The anecdotal evidence that I know, for instance, here in Barcelona, is that some Brits that have also Irish roots are seeking an Irish passport in order to stay in the EU because they want to remain EU citizens. They want to continue living here in Barcelona. And also for the economy, I think it causes some pause in investment. And we're seeing some deteriorating figures for the UK, so I'm also bearish on the fundamental side. Comment here by Sinatra, the Panama Papers US argument was even portrayed on German public radio today, pointing at North and South Dakota, Nevada, etc. Yeah, it could be interesting as well. I still expect Süddeutsche Zeitung and other papers like The Guardian, and well, 100 newspapers were involved in this, to come out with new names. We know that it's a treasure trove of papers, and not everything has been published. We know that WikiLeaks has asked for publication of all the papers, so the public can judge not only the journalists. Okay. Anyway, I think the story is far from over, and perhaps we're waiting for the best moment to expose these names. We have the New York primaries this week, tomorrow in the US, in they're both Republican and Democratic parties. So let's see if maybe something will be timed for that, but you never know. Anyway, yeah, I think the story is far from over. The editor of Süddeutsche Zeitung promised more. At the moment, I'll wait for his word. Anyway, good morning, Fabian as well. Comment from Ed, I don't think polls move the FX. How can you claim that by asking a sample 1,000 people is indicative of the whole population of the polls? In the past, they were accurate. Yeah, well, yeah, you're right. First of all, the polls, especially in the last British elections, were not accurate. They showed a very close race between Labour and the Tories, and eventually it was quite a significant win for the Tories, for the Conservatives. I mean, David Cameron now has an absolute majority with his party. This problem is that the party is divided, but anyway, it was totally different. Okay. On the other hand, there's no other. What will you trade on? I mean, or not only trade. Well, markets move by speculation, and these polls provide fuel for the speculation. So when there's nothing else, that's what you stick to. Scotland, well, the polls were not that bad over there. I mean, they did show a narrowing gap. At some point, about 1 month towards the referendum on Scotland, somewhere in August 2014, we had a narrowing of the gap, and one poll showed even a majority for leaving. Then the polls went a bit to the other side, and David Cameron and others made a big effort. So towards the elections, towards the referendum, the polls did show a majority for the Stay campaign, for the Better Together campaign. I think that the actual result was quite similar, but maybe it was the margin was a bit wider than expected. Anyway, again, the conventional wisdom is that the undecided voters will eventually not go for the unknown and an independent Scotland. Now we know, I mean, now with the fall in oil prices, things could have been much worse for Scotland if they relied on this source of income. So they did stick with the UK, and English voters stuck with with the Tories. Things can, of course, change all the time. And also with the EU, it's a lot of uncertainty. The scaremongering does have an impact. Okay, I still don't buy the say hedge funds risk on poll data. So far we didn't see. I mean, I think once we see a big poll that shows a more significant majority, I mean, above the margin of error for Brexit from one of the respected pollsters, I think we could have a more and perhaps worse impact on cable. Okay. Another comment here. Obama IMF BOE still scaring the heck out of the Brits while its betting sites already adjusting the odds. Yeah, lots of scaremongering. I must say this. I'm disappointed that this is the debate more about scaring of what I mean. If it's such a bad thing, all this Brexit, why did George Osborne, why did David Cameron go for that? Why didn't they just say, you know what, we don't want to even take the risk. We're going to stay in the EU. In any case, just don't. If you want to stay in the EU, vote for us. If you don't want to vote for UKIP or whoever, because eventually the agreement they reached with the EU, I don't think it's that meaningful. The debate isn't about what the UK achieved in the negotiations with the EU, but more about the danger of getting out. Okay, so yeah. Anyway, let's move away. UK crude is getting more expensive to extract as it's deeper drilling now. Less reserves, yeah, that affects. So I think in that sense, many Scots are now relieved that they did stay in. Okay, because if that was the source of income that Scotland relied on, it's not that good anymore. Okay, I heard that Aberdeen, the capital of Scottish oil, is not doing so well. Okay, just a second. Sorry, a bit of cold this morning. Yeah, exactly what I said about Scotland all the while. Yeah, they were lucky this time. I heard that Scotland would opt for a second referendum if the UK were to leave the EU, because most Scots, a vast majority of Scots, want to stay in the EU. So if they have a different deal, if staying in the UK means being out of the United Kingdom, they would want to change their fate. Now, this would mean re-entering the EU. This would mean still having this dwindling source of income from oil. I'm not sure they'll go for it that fast. They would be bankrupt if they weren't independent. If they would have to. In any case, they think they'll have to diversify away from oil, like many other countries need to do. I mean, those dependent on oil. Okay, I think it's time for the wrap up for today. So this is the wrap up for Monday, April 18th. Everything is around the Doha summit, the Doha disappointment, the downfall. The outcome was much worse than expected. Just absolutely no agreement. The Saudis went tough on Iran. Iran didn't even send a high-ranking representative, and also other Gulf countries probably joined the Saudis. In any case, there no decision on output freeze. They didn't decide on anything. Oil prices are falling, perhaps not as much as expected, because Kuwait oil producers are on strike. But this is the big effect in the markets. So looking first and foremost on oil, we are seeing some kind of bounce now, but still 37.60 is the low, 39 is the high. A clear weakened gap on WTI crude oil. Canadian dollar weakened gap as well, getting closer. Well, currently trading very nicely in range, at least respecting technical levels. 129.30 to 130 is the current range. High resistance 130.80 and 131.70, support at 128.30 and 127.50. This is clearly the biggest loser, the Canadian dollar. Also, the Australian dollar is a loser, almost closing the gap, but not there yet. It could have been worse for the Aussie. Support at 76.40, 76, resistance 77.40. This is sort of more collateral damage. Canada is the oil producer, of course. Japanese yen on the safe haven flows, and of course on the tragic earthquakes on Thursday and Friday. Japanese yen is attracting flows. It found support above the 107.65 level. We're seeing the gap around 108.50, resistance still at 109. So we're seeing some moderation there, but it's still Japanese yen attracts flows. There's a gloomy mood in markets. Stocks are falling, commodities are falling, commodity currencies are falling, the pound is falling, and the Japanese yen is a winner. Okay, euro dollar very tight in range, perhaps enjoying some very, very minor safe haven flows, but I would call it just plain range trading. Nothing to see here at the moment. A bit frustrating. 112.50 to 113.35 is the range. 114.60 high resistance. 111.50 low support. The pound is getting carried away with commodities and commodity currencies. 141.25 is support, followed by 140.50 and 140. 142.80 is resistance. Talked about the yen, the CAD, Aussie. Kiwi is supported by stronger than expected inflation figures, helping it counter the fall in oil prices, the fall in commodities. So it's basically stable at 69.20, balanced for the day. 69.80 is resistance. 68.20 is support. Just mention Luca's excellent short on CAD yen. Currently, rising just a bit, but all in all, at the peak it fell, or the trough it fell almost 2%. Okay, big weekend gap over there. Big move in CAD yen. Other events over the weekend, we had mentioned earthquakes, also tragic earthquake in Ecuador, and also in Latin America. Brazil is getting closer to an impeachment of President Dilma Rousseff. It passed the lower house and expected to reach the upper house. Watch out for that space. Also has sort of an impact on commodity prices. And towards the ECB meeting on Thursday, we heard one of the French members, Villeroy, asking Germany to do more. Doesn't have an impact so far, but it will. Just something to watch towards the ECB. Figures we had on Friday were not so good, especially in the US, with disappointing industrial output and consumer confidence. For New Zealand, it had the biggest impact because it's quarterly CPI. Today, we have Dudley speaking at 2:30. He's the president of the New York Fed and a dove. Let's see how he reacts to oil prices, or maybe not. The housing market index, that's a third-tier figure, and the Australian RBA meeting minutes in the middle of the night. Okay, we have more events, of course, more interesting events later this week. See more questions here. Yohay, how much do you see WTI dropping after a no-go in Doha? Do you think we can retest the 30-35 level or even test the lows? I think 35 is a level to watch, because let's look at WTI crude oil. Okay, 35 is where we've been early in April, before we had that big bounce. But remember, we have this strike in Kuwait. We have production in the US a bit beginning to fall. So it's not all negative for oil prices, but I would say 30 is a bit too far out, but 35 is critical support, and I would expect another wave of selling and to get closer to 35. Okay. Okay, so warning here from Sinatra that we might have an even bigger earthquake in the Pacific Rim. Yeah, not good news. We had earthquakes in Japan and Ecuador, and perhaps we'll have in other places. I hope everybody stays safe. The big shake still to come. You see 40, perhaps 41 being tested. JM. Yeah, perhaps we'll have a bounce in oil prices. Of course, oil prices and also currencies are never a one-way street. The voice that's worrying, dollar yen may drop dramatically. No repatriation if another big one hits Japan. Yeah, well, hopefully these aftershocks are the last earthquakes to come. Technology has advanced a lot in earthquakes, in earthquake detection, but it's still, you never know when a big one is going to hit. Yeah. Okay, anyway, let's take a last look at euro dollar remains frustrating. We are seeing, we are seeing some kind of a bounce back in CAD, in the Aussie, in the yen from the initial moves, but all in all, the gaps are maintained. Anyway, that's it for today. Thank you very much, everybody, for coming. Wish everybody a safe and successful day. As always, no earthquakes, well, only in market, not in real life. And unfortunately, we had some bad news this weekend. And yeah, and we'll be here tomorrow. So till tomorrow, that's it. Thank you and goodbye.